Thank you again for another episode of Ask the Professional. This week, we have our good friend, Harry Geozian from Chase Financial. Welcome, Harry.
Thank you, gentlemen.
Welcome.
I'm honored to be on your show today. Thank you.
Thank you. So just real quick, can you please introduce yourself and tell people who you are and exactly what you do?
Well, with pleasure. Harry Geozian, Chase Financial Corp. I'm a mortgage broker, not the bank. And I've been a mortgage broker for 32 years of my career, helping people finance homes the entire time. And I'm just honored to be able to work with you and your clients and help share the information that I know after my years of experience.
Perfect. Thank you. Alex from Team Montalvo.
Hey there, everybody. I'm Alex with Team Montalvo. Oscar and I are partners. And this is a first debut episode of Ask the Pros. Our featured guest today on our debut episode is Harry G, as you have heard before. So we have a couple of questions. We're trying to keep this brief. Everybody's trying to get back to their things. But Oscar, if you have a couple of questions or you want me to start?
Yes, I know I do have a couple of questions. I actually wrote them down. I'm sure you've seen all over TV and social media about this forbearance.
Yeah.
Everybody's talking about that if you cannot make the payments, that the banks are willing to work with you. You can defer your payments, maybe, 3 months, 6 months, or even a year.
Mm-hmm.
But a lot of people don't know what it actually means. So if you can please share with us what it means, how does it work, and who is it for? That would be great.
Well, I got to tell you, fantastic question, and I think this is a great lead off for your inaugural show on this. A forbearance simply means that you're postponing making your payment for a period of time. And if that payment period postponement is for 3 months, up to a year, I believe under the CARES Act, is possible. And what that simply means is that you're not making a payment. Now, it doesn't mean that that payment's going away. It doesn't mean it's a free 3 months. You owe that payment. You owe that money to the lender.
So it's not forgiven.
It's never forgiven. No.
Okay.
Wow. So that's important. That's a very important distinction because a lot of people think forbearance means free money or forbearance means I don't ever have to pay that back for maybe a long time. The reality is without any greater detail or guidance, generally speaking, the assumption is with the forbearance programs, if you go 3 payments without a payment, 90 days you can go, is pretty much the standard, without making a payment. At the end of that 90 days, you have to now make up all 3 payments plus that payment due for that month. So potentially when you go back into repayment, you may have 4 payments to bring in all at once.
Okay, sorry to interrupt you. Let's just make an example. I won't be able to make my mortgage payment on April. Let's say my mortgage is $3,000. So I'm gonna miss April, May, and June. So are you saying that when it comes to July, I have to bring all the accounts in arrears, like 12 grand?
Correct. Well, those 3 months are 9,000, using your example. And then you have that July payment, which is another 3,000. So yeah, basically you'd have to come up with potentially $12,000 come July 1 in that example.
Okay.
Well, who's going to qualify? I mean, who has that kind of, if they had the 12,000, they could make the payment, right?
Right. So here's the thing though, before we go too far, every servicer is going to deal with this differently. And I've heard in the last few days a whole variety of stories. The generic, what I just shared with you is pretty much the common thread.
Yeah.
But I've also heard that some lenders are going to either extend the term of the loan, which is a good thing, right? So if you had a 27 years to go, they'll make it 27 years and 3 months. So they'll add it on to the end and add 3 months onto the mortgage. I've heard other lenders say, okay, they'll give you a period of time to repay it over, say, a 12-month repayment period. And that's not bad either. So it helps soften the blow, but the standard is that at the end of those period of time, whether it's 90 days or 120 days, you now owe that money to the mortgage company. And I won't get into all the details.
Okay.
But understand that even though you don't make that payment, the person who's collecting the payment from you, the mortgage servicer, they're obliged to make those payments on your behalf to the person who actually owns the loan, the company that owns the loan.
Oh,
So,
wow.
so they're actually
Okay.
obliged to make those payments, which is why they're not a big fan of doing this, because they got to front the money.
I
Wow.
see.
Now, and I'm getting probably too detailed. The thing is that there was no thought that went into when they came up with this CARES Act. What was missed in the conversation are probably a couple of things. One is who's going to help bail out the servicers who are no longer collecting these payments, right? Because they have to front those payments. Now, there was a solution for FHA and VA. That's actually out there now. But for the majority, the Fannie Mae and the Freddie Mac, it's not out there at the moment. But bringing it back, you asked one of the questions, I believe you asked Oscar, is who's it for?
Yeah.
The forbearance really is for somebody who really can't make the payment. You've lost your job, you're out of work, you've been furloughed, the unemployment checks haven't come in yet, because I understand there's some challenges getting the unemployment money to flow. If you don't have liquid assets, if you don't have any retirement accounts that you can borrow against, if you don't have any savings, if you really are out of cash, it's for them.
Okay.
But if you have the ability, if you have savings that you can dip into, nobody wants to, but if you have the ability to make those payments, I highly recommend doing so. And if you find 2-3 months down the road that things aren't better, which hopefully they will be, that you have to then do the forbearance, at least you can do it at that time, right? But my observation would be this: it's probably better to do it now than to not make those payments if you have the ability to do so. And let it really be for those people who are in need to do the forbearance. And there's other reasons for this as well, as it might impact your ability to get a mortgage in the future. So.
Which is huge. I mean, right now, a lot of people see the interest rates being so low, and they want to maybe refinance once they get back to work. But if they apply for this forbearance, they might not be able to qualify for that.
That's correct.
Okay.
Right.
That was exactly my follow-up question. I do have a client who owns a restaurant, and obviously he has been affected. He was in the process of getting approved, but let's just say that he applies for whatever federal programs available are out there. Let's just say by July or August that things go back to somewhat normal, because he applied for that and because he probably missed 2-3 payments. Will he be able to make a purchase? Or will that affect him? Probably yes.
That's an excellent question, and that's something that people miss. So my understanding with the CARES Act simply is this: that if you do the forbearance, that during that period of time you're not going to be reported late on the credit report.
Okay.
So that's a good thing, and that is preserving your FICO scores. The problem is that our industry standard. So, and this is again, it's kind of moving a little bit further ahead before we even caught up, so to speak. And let me explain to you what I mean. So we have as an industry need to know that you've made your payments on time. So if you're going to go through a refinance or buy another home, we need to know that you made your mortgage payments for the last 12 months on a timely basis. Now, when we go back and let's say 3 months later, 4 months later, we look to do a refinance, take advantage of lower interest rates, or maybe somebody wants to sell and now move up to a nicer home.
Okay.
You may not be able to get that mortgage because what will happen is the following. I'm going to be required to get a mortgage rating. And when I do the mortgage rating for the last 12 months, I'm going to see a 3-month gap where no payments were made.
There you go.
If I don't have if I'm missing 3 payments, the underwriting standards today are such that we would not be able to do a mortgage. It may come to pass that in the future that Fannie Mae, Freddie Mac, underwriters, that the major portfolio owners may make a modification to their guideline and say, okay, this is a one-time pandemic-related issue,
okay.
And so we will grant an exception for that. But as it sits today, where we are on this day, that doesn't stand right now. Right now, the standard is you have to have a payment history. If you didn't make your payments for 3 months, that's a default, not having made 90 days worth of payments. And you would not, in theory, be able to get a transaction or a refi or a purchase loan in the future with that, if potentially for as much as 4 years. I would tread very carefully here. Now, there are some people I've spoken with that have said, you know what, Harry, we're going to do the forbearance, and they actually have the ability to make the payment. There's cash flow concerns, and they're going to gamble that they're going to take the forbearance option and hope that Fannie Mae will catch up to the guidelines on that. Don't know. That's a risk.
Wow. That is a big gamble.
Yeah.
So another question that I have, Harry, what kind of challenges are you seeing right now with appraisals? I mean, we're not supposed to show houses. We're not supposed to be in front of people 6 feet away. All those restrictions, how appraisers are appraising? I mean, are they doing drive-bys? Are they just doing desktops? Tell us about what's going on that.
Another excellent question. You know, I will say that that's something that the industry got right. And as soon as the coronavirus hit on a larger scale, both Fannie Mae, Freddie Mac, FHA, VA, so they themselves have come up with guidelines. And their guidance is such that we can oftentimes get by with just a drive-by, which is called an exterior-only appraisal.
Okay.
Sometimes we can do just a desktop, you know, calculate on the computer, look and see what the comps are looking like, and get a value that way. On occasion, a full report is still required where they actually enter the property and do a traditional appraisal. So your traditional appraisal, you walk into the property. But if you don't have to do that, we can oftentimes get by with a drive-by. So it's actually been working out quite well. A number of our transactions, I would say the majority of our transactions nowadays do not require an interior inspection. And it's safer for the consumer.
Yeah.
It's safer for the appraiser, who's an individual that's driving out. And it's actually saving the client's money as well, because a drive-by appraisal is cheaper than a full interior inspection appraisal.
Oh, wow.
Okay. And I will mention something that even predates this coronavirus, and it's something that we are very closely watching when we do these. We can oftentimes get away with it without even having an appraisal done at all. So Fannie Mae and Freddie Mac have this wonderful technology, and they have this installed database of values that they know, and they have a sense of where the market value is. So if you're purchasing a home for $600,000, and the comps are there to support it, oftentimes we get an appraisal waiver. So appraisal is not even required. So we can even get by without even having an appraisal done. But where appraisal is required, coming back to Alex's question, we can oftentimes get by with just simply a drive-by report.
Does that apply to FHA as well?
So with FHA as well, yeah, we have the ability to do a limited review, a limited drive-by on that, yes.
Okay. So another question that I have is, well, let's talk about grant deeds and the signing of loan docs. With all this, you know, restrictions, how are your, I mean, not loan officers, but how are clients signing grant deeds? And like, do they bring their own masks? Do they send the paperwork DocuSign? I mean, what's going on that end?
So you know, our industry is moving slowly to this direction, and it has to do with notary. So we can oftentimes get everything done by the electronic signature, right? But it's when you have a recorded document that has to go to the county recorder that requires a live signature with a notary stamp on there.
Sure.
And so what I'm seeing, so we have a notary that we, for example, refer our clients to for loan documents. And this particular notary, she is amazing. She wipes down the pens with alcohol. She wears a mask. She wears goggles. She wears booties on her shoes. She is, I mean, it's very, very careful. When you know, with the notary, you have to do a thumbprint. So you have
Yes,
to
sir.
She takes a pad, a cotton pad, squirts it with alcohol afterwards, hands it over to the client, and so they can wipe down their fingers. So the notaries are being, and not as goes for this person. I've seen other notaries do this as well. They're very aware of it. They're very in tune with this. Clients are particularly concerned as well.
Yeah.
A lot of times the notaries will meet the client in a garage, in an open setting in the backyard. Today it's raining, so it'll be in a garage.
Mm-hmm.
But when it's not raining, they'll sit outside. There'll be social distancing always. You know, we had one of our clients who's a cardiologist sign yesterday, and she was in full protective gear, and even told the notary, "I got a hint for you. Get those disposable rain covers."
Yeah.
And it's just $1.50 at a local sporting goods store.
Yeah.
And it's easy. So there are solutions, there are workarounds for this, Alex. It's for the most part, it's working out well. You know, we have an escrow company right next door to us, Landmark Escrow. fantastic company.
Great
And
company.
they are very careful as well. They're exercising a lot of that protocols.
I do have another question. Let's go back to when people are not paying. Actually, no. When they are not working, but they do have the money to pay their rent or their mortgage, and they want to purchase. Not being able to work for 3 months, how does that affect the guidelines? I mean, they're current on their mortgage or rental.
Yeah. I actually think that's an easier hurdle to overcome. Right?
Really?
Yeah, because there is an extenuating circumstance here, right? That we know there was a global pandemic. We know people were temporarily out of work. So if you're working for company A, they lay you off for 2 or 3 months, furlough you, whatever you want to use the word, and then you go back to work for that same employer. It's easily documented. It's understandable. There's a work history, be it 1 year, 2 years, 3 years, 10 years, 20 years. There is a history of employment. There's a temporary break, and you're back on the same job again. Makes total sense. We can get that through underwriting, I think, very easily. I'm not so much worried about that. Now, if the all clear signal goes out and you're still not working after several months, that could present another problem. But the assumption being that once you're able to go back to work, the stay-at-home orders are lifted, and you're back to work, I think we'll be totally fine with getting that.
I see.
Perfect. Good.
Good question.
Well, one quick question before we go. Just a personal opinion or what you've seen in front of you. It's April the 9th, 2020. We're in the middle of this pandemic, if you will. Have you seen a substantial drop in mortgage application, a slight, little bit, not even noticeable, all of the above? What's going on?
Well, I'll tell you what I'm seeing. So as it relates to, let's say refinances, those are still very active, and we're still getting requests on a daily basis. Rates are slightly higher now than they were a month ago, but that has more to do with what's going on in the markets, the secondary mortgage market, which that's for a different conversation for a different day.
Sure.
But as it relates to what I hold more important, near and dear, is the purchase market. Where is the activity? Are people still buying homes? Are people still selling homes? And I can tell you, to this day, we're still seeing activity. We're opening up escrows all throughout the week. I will say we have several escrows going on, and it's nice. It's nice to see that there's activity in the marketplace. It's not at the level that it was, so there is a drop off there, I will say. But where you've got a property that's for sale and you've got a buyer that wants to buy, we're still seeing activity. You know, one of our agents, a week ago, last weekend, weekend before, had a listing, a vacant property. She had 12 different showings over the weekend. 12 showings over the weekend, and of course spaced out.
Yeah,
but
of course.
That speaks volumes about where this market is.
That's right.
And I can tell you that as soon as this order is lifted, we're not going to have any days off, my friends. You're going to be working hard.
Believe me, all the agents are like, "Come on, I want to go out."
Yeah,
we're going crazy at the house. Yeah, I know.
Right. I mean, the buyers want to buy, the sellers want to sell.
Yes.
We have a very strong economy, and the resilience is gonna blow everybody's minds away. I think when we come out of this, we're going to come out really strong. That much I can say, and I have great confidence with that.
I think so too. Well, I think we should end it with a positive note, which is great. Thank you so much. By the way, if you guys like this video, please share with your family and friends if you find it helpful, and post your comments. I'm sure we'll go back. Harry, I'm sure you will go back and answer some of these questions on Facebook. And we
do want to thank you very much. On your inaugural show. I appreciate it. Thank you. It means a lot to me.
Thank you.
Thank you for joining us in this episode of Ask the Pros.
Yes.
Don't forget to share, like, and subscribe. Harry, if people want to get a hold of you,
perfect.
Where can they find you?
Well, obviously you got me on Facebook. You can find me there. But if you'd like to call me at the office, my number is 818-709-3600. But more importantly, have them ask you guys and make the introduction. That way we give you VIP treatment.
That's
we
right.
know they come from Team Montalvo. It's a front of the line pass, baby. You go right to the top.
All right, you guys. Thank you so much.
All right, guys.
Be safe, everybody.
We'll talk soon.
Thank you.